Welcome back to Halftime Report. We have finally got all the numbers on the WPI for January, and the overall inflation number is way more subdued than what our poll threw up. Our poll threw up 0.6 compared to 0.7 in December, and the actual number has come at 0.25. I see an Informist poll was also 0.5% inflation. In any case, that's not much, but the fact that it is even lower than that could be actually not a matter of celebration, but of concern. The food inflation is down about 1.36% month on month. That is January over December, but that's par for the course. It always happens that in winter months, food article prices keep falling. There hasn't been a fall in cereals, but there is a fall in vegetables and potatoes in particular, a fall of about 11%. Vegetables overall are down by 8%. Potatoes and onions are the ones that have seen the biggest fall. So all that is welcome news. I guess what will not be welcome news is a deflation or a disinflation, if you please, in manufactured products. Year on year, the disinflation is minus 1.1, but there is a month-on-month manufactured products fall of minus 0.2. Now, a falling raw material prices will also mean falling end product prices, and that may be a cause of concern. Core inflation fall up to a point is good. Beyond a point, it may transcend from disinflation to deflation, and it can worry makers of manufactured products, because what we see is also even products like cement prices falling month on month. I'll just come back to you with the cement product. It's down minus 0.7 month on month. Mild steel and semi-finished steel is down 0.5% month on month. And I could go on. Basic metals down 0.36 month on month. So there is a goodish bit of industrial products which are cheaper than they were the month before. That can be a bit of a discouragement for corporate India. Let me ask the Economist for her views. Joining me is Aditi Nayar, Chief Economist at ICRA. Aditi, what do you make of this overall number? I know it's not a much tracked number, WPI, but at plus 0.27 and a minus 0.2 for manufactured. Is this a welcome number?
Thanks, Latha. So, like your poll, our forecast was higher. We thought the number would be flattish month on month at 0.7%. And what has happened is that the primary food articles and the manufactured food items inflation is actually lower than what we were penciling in. So a large part of the lower than expected number is coming because of food in both the primary and the manufactured segments. But you are right. In addition to that, the the core part of the manufactured products, which is the non-food manufactured products, there the index number has also come in a little bit lower than what we had penciled in. I think this is possibly something that's a little bit temporary. We still need to see what is the impact on landed costs because of the Red Sea issue. So this may end up being transient. Having said that, we are most certainly going to end up with the WPI being in deflation on average in FY24. And I would, I'm fairly certain we're going to end up with the WPI being sub 1% at the end of March also, which would have implications for people like, toll operators who have a linkage to the WPI for their toll resetting.
All right. Okay. From a policy standpoint, Aditi, I just wanted to know, overnight we got hotter than expected inflation in the US as well. How much will this moderation in the WPI weigh in when the RBI looks at it policy versus what happened overnight in the US, which perhaps may have pushed hopes of a rate cut beyond May as well now? And this is the Fed that I'm talking about.
Sure. So, as far as our own MPC is concerned, we've got at least another almost 2 months to kind of wait and see how the Red Sea and the other issues pan out. And of course, our own monsoon will be important as well. Although we really won't have much information about that for a few months yet.
In April.
From the Fed point of view, my sense is that June is the earliest that we're going to get any rate cut from the Fed. If all goes well with the early indication for the monsoon and there's no major commodity price disruptions, then our baseline forecast is that the MPC could change the stance in June and follow that up with a rate cut in August.
But Aditi, the consumer price, food inflation came in at 8.3. Will the Reserve Bank be in a bind? You will have core inflation, which is, okay, 3.6 in CPI, but in WPI, it looks like it is in minus terrain. If you have a core inflation that is falling into deflation territory, but food inflation keeps the headline way above the 4% mark, they're in a bit of a bind, isn't it? Can they really move to cut or even indicate any dovishness?
So my sense is therefore the monsoon outlook will be quite important. That will really hold the key. Do we expect the next set of harvests to be good and to ease food inflation or not? I think that's really going to hold the key to whether the MPC feels comfortable enough to change the stance and then start cutting rates by June and August of 2024.
Okay, just one final quick number. I don't know if you even forecast this. What would your WPI number be for next year? I mean, for this year, as you point out, it would be probably -1 or something. But for next year, is it likely to remain this bad, or is it because of the base effect you will get a good WPI number?
So for this year, before today's number, our average was minus 0.6%. So it will be slightly deeper than that, maybe 0.7 or 0.8 after we rework the trajectory from today's numbers. And for next year, we have a wide band. WPI is extremely sensitive to commodity prices. So we've got a band of 2 to 4%. So positive, no further base effect from the spike of the Ukraine-Russia crisis, but modest.
Oh, right. We'll leave it at that. Thank you very much, Aditi Nayar. As you say, there is a lot of water to flow between now and even April. And perhaps the Fed also is not going to contemplate any change in stance up until June. So we have plenty of data to look at. It's just that this data is a little disturbing in terms of the steep fall that we are seeing across the board in all manufactured products, beyond a point that disturbs industry, that the finished product prices, by the time you finish production, may actually have to be priced lower. It's not, beyond a point, falling inflation is a falling knife.
Well, falling inflation is a falling knife. Latha, thanks a lot for that. Don't know how much that has, aided the sentiment of the market, but we've definitely seen some recovery. Can't entirely or largely attribute it to the WPI itself, but the Nifty Bank is now sitting with a cut of just about 80 points. This after a big gash in the morning, and that's largely because of a couple of stocks doing extremely well. We have SBI, which has moved to the high point of trade. Axis Bank is doing well. That too has recovered about 2% from lows. And ICICI Bank. The bulk of these three stocks form a bulk of the weight on the Nifty Bank, which of course goes into weekly options expiry today. So we'll keep an eye out on this and that index as well.
US pre-market indexes, S&P futures have moved into the green, as has the Nasdaq futures. Maybe a little bit of help.
Okay, all right. So maybe it is WPI along with the global cues which are aiding. But nonetheless, for our markets, it's definitely been a recovery that we can see on the screen. Thanks, Latha, for that. We need to take a short break. But